Hey, how's it going, everybody? Anmol here. Welcome to another edition of the Swing Trade Newsletter. Welcome to bear market. So, you know, if there's new people joining us for the newsletter, man, you guys missed a heck of a ride, in the stock market. Fastest decline since the financial crisis, right? Also, this down day here was the record down day since like 1987 or something, right? The most we've gone down in a single day. And then on Friday, we had a new record, which is the largest up day in a long time, right? In terms of points, the largest up. So we set a few records here, right? Fastest decline. We've set a record for the most we've been down. We've also set a record for the most we've been up in a day, fastest comeback, and all that good stuff. So where do we go from here? A lot has happened since we last talked economically right now. Again, for me, I like to look at economic news. I like to look at what's going on around the world, but that's actually just for like keeping myself well informed, as well as it's also entertainment, right? But in the end, like, I make my decisions purely based on the chart. I don't make my decisions based upon what people think. The news, economics, politics, I don't make my decisions based on that, although I do read upon it. Good to be well informed, right? Trading decisions, however, are all made technically. So technically, nothing of surprise here. There is actually one point of surprise. So the decline obviously wasn't a surprise. I talked about how we're going to get a decline from here, and then we got that decline, and then we dropped over here. People were like, oh, fastest decline, let's buy. I was like, no, this is probably going to be a lower high. All right, we got the lower high, we got the lower low, right? But what's interesting here is that this lower low, instead of bouncing, it dropped even further, right? So big move down. Now, none of this was a surprise to me, right? I expected lower high, lower low, downtrend, expected a crash. However, what is surprising is how fast this happened, right? I expected this decline to maybe take like a few months, maybe like a year. This happened like in 2 or 3 weeks, which is insane. Now, as you guys remember, last edition of the newsletter, I talked about that zone of 257, 263 that could act as support, and it actually did a little bit on Friday. You can see how we dipped below, came right back up, and closed above it. So that's bullish as far as the charts, and we talked about how the 90 EMA was still over there, so we're gonna get a bounce, and we got a bounce on Friday. However, I don't know if this is gonna last, right? Because when people get fearful, right, there's a big popular saying in the stock market, stocks take the staircase up, they take the elevator down. Man, this time was almost like we were taking the elevator and then somebody cut that cord for the elevator. That cord broke and the elevator fell straight down. That's kind of what it looks like. However, if the elevator breaks, right, it doesn't go right back up again usually, right? It takes a while. So I think we're going to enter a period of slowly going down, trying to find a bottom, right? Over the weekend, well, basically right now, as I'm talking to you, there's been a lot of news, bad news, so to speak, that has come for the markets. So the good thing about, Friday is that we got some levels now, right? If you take a look at the hourly chart, if I go to the 65-minute chart, you can clearly see that we tried to make a level of support in this general vicinity, right? We came down here, we bounced, we tried to touch it again on Friday, we bounced. So now we got a clear level, which is about 247.50, okay? So the next week, tomorrow actually, Monday, right, is going to be a very interesting day. So as my thesis is pretty simple, right? If you hold 247.50, then yeah, we chop around in this area. We go sideways, maybe drift a little bit lower and try and find a bottom, right? So that's what the market's going to try and do. But we did have a lot of, negative news over the weekend, which I was always concerned about. So there's a bunch of news this weekend, right? So let's start with the good, right? The only positive, I guess, for the market is that the Federal Reserve is really stepping in to try and support the market, right? Federal Reserve is stepping in. So that's a good thing, right? They were already committed to almost like $1 trillion that they're going to be buying. But then after the news of them potentially buying $1 trillion, today they announced they're going to be buying like additional $700 billion, right? And they also cut the interest rates to zero. Wow, right? So now the interest rates have been slashed yet again all the way down till zero. So usually these kind of things are good thing for the economy, right? Lower interest rate, people take out more loans, they buy houses, they buy cars, So it supports the economy in a good way. Businesses get loans as well. So that's always good. But people, in my opinion, are not going to take that positively. Why? Because, well, right now, everybody's thinking that, okay, this is a medical crisis, not an economic crisis. The economy overall is good. The jobs numbers are good. Everything with the economy overall is doing good, right? So people think this is just a medical crisis. However, when the Fed cuts interest rates, it's supposed to be bullish, but the way I look at it, and in my opinion, that's how most fund managers will look at it, is it really just a medical problem? Right? Why is the Federal Reserve being so aggressive? They already cut, interest rates just a few weeks ago. Then they committed of buying about $1 billion. Now they're coming in and saying we're going to buy another $700 billion. We're going to cut interest rates again all the way to zero. That makes you wonder, right? That makes you think, is there anything else going on that we don't know about? Something bigger going on, right? So that's, in my opinion, market's going to take that very negatively on Monday. And also the thing is that the travel ban was extended from, it was earlier just China and Europe. Now it got extended to UK and Ireland. I just made it back in the nick of time. So as you guys know, I was traveling. I was in India. Then I actually was in London. And during my flight, right, while I was in the air, the travel ban from the UK was announced. Luckily, that goes into effect tomorrow, so I was able to make it back in time. However, the queues at the airport were insane, right? It was like 3 hours for me to get out of the airport, which is crazy. But anyways, that's all off topic. So, that travel ban restriction happens, and now they're talking about a national lockdown, right? Some places have already started where bars, clubs, restaurants, schools are going to be closed, public gatherings are going to be closed. National emergency was also declared. So this is going to hurt a lot of small businesses. It's going to hurt a lot of small businesses. It's going to hurt a lot of, wage employees, hourly employees, because, well, they're not going to get any hours if the businesses are closed. So it's going to hurt employees. It's going to hurt small businesses. And I think now we are in bear market. So welcome to recession, right? Welcome to recession. That's what's basically going to go happen right now, right? We're going to enter a period of recession. And we're also going to, my forecast is that in the next, by the end of the next few quarters, you're going to hear about a lot of small businesses going under, but people declaring bankruptcy, people not able to pay their bills. So this could potentially lead into something very catastrophic, right? Like it could be like a catastrophe where I really wouldn't be surprised now that if the market, how much ever we fell so far, like we double it, right? Like 50% decline, 60% decline. Totally possible, right? Totally possible. And what the funny part is, doesn't even matter about economy because the charts actually gave us that sign, right? I talked about it in January that we could come in. And what did I talk about in January? I talked about in January, before this even started, right? Because technically we got reversal signs. We're extended from our moving averages. We got a topping tail candle, right? Which always usually, as we teach in our courses, this candle suggests a move down. That was followed by a big red engulfing candle, another big red candle. And in the newsletter in January, I think I said if we do hit that recessionary period, then we're hitting 210, which I still stick to. It's still very much possible. And so that's something we got to keep an eye on, that it's possible that this is not just a drop. It's possible this is a start of something where we're going to bounce. We're not just going to go straight down. We're going to bounce and then enter like a period of just slowly drifting down into that area. This is what typically bear markets do. So if you go back, again, history is the biggest thing, right? History. History repeats itself. Look at this decline of 2000, right? Lasted about 2 to 3 years. Look at this decline of 2008, right? Lasted about a year and a half. So, can we go down all the way through this year? Possible. So Goldman Sachs had a investor call today. I was on the call, so some of the notes that they said, and I'll read it out to you. In the notes. So the Goldman Sachs call, they said, and again, 1,500 companies were on the call listening to this, including me. So basically, they said 50% of Americans will contract the virus as it's very communicable. This is on par with the common cold, rhinovirus, of which there are about 200 strains, and which majority of the Americans will get 2 to 4 per year. 70% of Germany will contract it, which is about 58 million people. This is the next most relevant industrial economy to be affected. A peak virus is expected over the next 8 weeks, declining thereafter. So we still got more 8 weeks potentially, is what they're trying to say. The virus appears to be concentrated in a band between 30 and 50 degrees north latitude, meaning that, like the common cold and flu, it prefers the cold weather. The coming summer in the northern hemisphere should help. This is to say that the virus is likely seasonal. Of those impacted, 80% will be early stage, 15% mid stage, and 5% critical stage. Early stage symptoms are likely the common cold, and mid stage symptoms are like the flu. These are stay at home for 2 weeks and rest kind of symptoms. 5% will be critical and heavily weighted towards the elderly people, right? Mortality rate on average is about a 2% and again leans heavily towards those who are elderly or their immune system's compromised, meaning up to 3 million people in the United States, right? About 3 million per year mostly die due to old age and disease, those two being highly correlated. There will be significant overlap, blah, 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 blah. Again, I'm just trying to find the biggest thing. So basically they said, let's see, the debate is how to address the virus, right? So the US is leaning towards quarantine. The UK is tending towards allowing it to spread. So what the UK is doing is they're allowing it to spread so that the population can develop a natural immunity over time, right? Quarantine is likely to be ineffective, is what they say, and result in significant economic damage, but will slow the rate of transmission, giving the healthcare system more time to deal with the case load. China's economy has been largely impacted, which has affected raw materials and global supply chains. It may take 6 months for it to recover. So again, they are basically saying, if you read between the lines, the virus is still, again, it's going to get worse for another 8 weeks, and it might take 6 months for the global economy to recover. So what they're signaling towards is that this decline could continue. Global GDP growth rate will be the lowest in 30 years, around 2%. S&P 500 will see a negative growth rate of 15% minus to 20% minus for 2020 overall. They also said there will be economic damage from the virus itself, but the real damage is mostly driven by market psychology, is what they say. Viruses have been with us forever. Stock market should fully recover in the second half of the year. So what Goldman Sachs is saying is that stock market should fully recover in the second half of the year. So we're in the first half, right? So potentially we could go down for another 3 to 6 months, which could take us down potentially into the level that I've been talking about, right? Although Goldman Sachs, whatever they say, I try and do the opposite, right? So if they're saying it could last 6 months, I would double that, right? Because they're usually wrong. But again, that's what they're thinking. They also said that in the past week, there has been conflating of the impact of the virus with the development of oil price war between Saudi Arabia and Russia. While reduced energy prices are generally good for industrial economics, the U.S. is now a very large exporter, so there has been a negative impact on the valuation of the domestic energy sector. This will continue for some time as the Russians are attempting to economically squeeze the American shale producers out, and the Saudis are caught in the middle and don't want further cede market share to Russia or the U.S. So again, basically, in a nutshell, the markets were already overbought. They were looking for any reason to go down. They found the reason with the oil prices and the coronavirus. So what Goldman Sachs is saying is there's no systemic risk, right? They're saying nobody was talking about that. Governments are intervening to stabilize the markets, and the private banking sector is very well capitalized. So what they're saying is that it feels more like 9/11 than 2008. So as you guys know, in 9/11, right, The year 2000, we got that little, decline. Where is it? Let me zoom out here. Yeah. So we got 9/11, sorry, 2011 right here. Right. So but what they're saying is it's going to be like this, where you got that decline, right? Like this big decline, which went from 137 to about 112. Market dropped big time, right? 9/11, and then we recovered back up. So what they're saying is they think it's like a drop, which is going to recover like 9/11 and not be like 2008 financial crisis. So again, we will see. It doesn't mean much what Goldman Sachs thinks because they've been wrong in the past and they'll probably be wrong again. We technical traders, we care about levels, right? So again, let's go back to our technicals. Right over here, I said we're going to run up, we're extending up, we're away from the moving average, we got reversal signals, market came in. Talked about it, no surprises. I talked about we're going to test the 50 MA, and that's the area we need to hold. We tested it, and we held it so far on Friday. So now, those same levels become crucial for us, okay? So as long as we stay above these areas here, yes, we can absolutely bounce back up, right? That's exactly consistent with what I've been saying. But based on what happens on Monday, we could see one more flush down, meaning just to, flush out everybody before we actually do get a bounce, right? Where could that flush go? Well, to the December 2018 lows, right? That's where we can go. So let's kind of take our thing. All right, so we'll take our little thing, all right? I like to call it the thing. We draw, again, another band. And that is where we could actually go and test, right? That the December 2018 low, which will be around anywhere between 235 and 233. So again, as I always like to do my homework, let's draw the lines, right? Let's draw the lines where we think markets could go to. Draw an upper band, draw a lower band, right? So this is what we've done throughout the newsletter. Right here, talked about that's the band of where we're going to crash. We came in. This is the band to hold. We're holding it so far. As long as we keep holding it, potentially we could see a nice move back up. If you break that band again on Monday or next week sometime, we're going down here. No doubt about that in my mind at all. Heck, we might even gap down to it. Who knows, right? We'll find out on Monday. I can tell you this, though. If you do get a decline right around here, I think that's viable, right? Like as you guys already know, in the previous newsletter, I talked about that I'm exiting all my long-term trades right over here, which I did, right? I bought back on Friday, right? I bought back. I got in about like total about 50% of my, actually 40%. So 40% of my positions I bought back on this little decline on Friday, right? What does that mean? Well, what that means is I got 60% still to go, right? I could potentially have 60% more money to buy as we drop. I'm going to buy about 25% more once we come down here, right? So if I buy 25% more when we come down here, what does that mean? Well, now that means I'm about 65% position. So again, I'm still not buying all of it, right? I'm not buying all my long-term trades yet, but bought 40% over here, right? I'm going to buy about 25 to 30% down there, depending on how we come down there. And then rest, I'm not even going to buy. I'm not even going to go full this year. I'm going to just keep it. Right? I'm going to keep like that, reserve of about an extra 35%, just in case we see something that most people don't expect, which I don't mind if it happens. I think it could actually happen, which will be a further decline down and test the next support area, which will be around that 200 mark. And that's the level where I will personally get full, right? So I'm going to buy, I'm going to get 100% if that does happen. So that's what I'm waiting for. I'm not going to go 100%, but that's the band of support that I personally am looking for to go 100%. 100% meaning fully invested, right? So that's going to be the next level of support. And in my opinion, that level, if that does happen, get your cash ready, right? Like I've already personally, you have to prepare for these things, right? Because it's not like, oh my God, market crashed. Oh, now I should buy. And then you guys are like, oh, but my money's in my bank account. Then you open a brokerage account. Then you put your money in the broker. It takes 3-4 days for your money account to be open, everything to be fully funded. And now guess what? You missed the bottom, right? So you got to get prepared for it. I personally, I pretty much cleaned up all my bank accounts Well, not all of it, most of them, right? I put all the money in my brokerage accounts, got them all ready just in case we wake up one day and something like that's happening, that I can pull the trigger and be a buyer, right? So that's what I'm looking to do right over here if that happens. So again, if you're not involved with the market, I think it's a good idea. Wait for these December 2018 lows. That's where you can start getting into some position if that decline happens next week. If not, wait for this area. That's the high probability zone. Like, this is a zone that I think if we end up buying over here, we're gonna be super happy. Our kids, our grandkids, everybody's gonna be super happy in the next 5-10 years, right? This zone, a little riskier in my opinion, but not a bad position to start, getting in, which I will get in, right? This zone, right where we are at right now, that's a little bit, in my opinion, risky, but it is a level, right, as we've talked about. So again, we'll see what happens again. Take it as we go day by day. As far as oil is concerned, let's take a look at what oil is up to. So oil also continuing its slide down on the USO ETF. So oil, as we talked about, oil is continuing to head lower here, and no surprises there. However, on Friday we got a interesting sign that okay, maybe we want to bounce here, or if not bounce, then at least enter a period of consolidation, right? So enter a period of consolidation where we just kind of chop around a little bit, and then we decide what we actually want to do, either go up or either break that consolidation and then go lower. So we're going to find out soon on that. As you guys know, we got into a position on Friday on an oil stock. So this is the open trade right now that I'm in. Occidental Petroleum, OXY. So I purchased this at $13.42. That's what I sent out in the newsletter. That if Oxy gets back, Oxy was trading at like $11.50, right? And then I sent out an email. If Oxy comes back to $13.42, I'm going to buy. We bought it on $13.42, closed the day higher, about $1 in our favor at about $14.26, went as high as $14.56. So it got off to a good start when we bought it. But again, anything's possible, because if we are going to die and the markets are going to die on Monday, and then possibly oil goes lower again and the stocks go lower. But I like this spot to start getting into this trade, and the reason for that is the monthly chart. Look at this monthly chart, right? This stock did nothing for like many years. Consolidation base, huge run up. The stock went from 12 to like 112, right? And now we're back down into those same levels. Like, that's insane. So I wanted to be a buyer at these levels, because if the reward to risk is pretty good on this trade, right? Because if we're right on this trade, I mean, this could go to, again, we don't even want it to go there. We could get out at like $19 or $20, but this could go all the way till 24, 25, 26. If suddenly one day we wake up and Russia and Saudi Arabia figured something out, then guess what? Oil's going to bounce right back up where it came from. So that's something to keep an eye on. But again, I'm in this position now. Time will tell what happens. Another trade that I'm in is Groupon. Okay, GRPN. This is another trade I called on Friday. So this is a trade I know a lot of you guys didn't trade it. Maybe because of the email. I don't know. Some people got confused. But I actually already took a loss on this one. Right? A lot of people were emailing me saying, oh, Groupon never triggered or Groupon canceled. I mean, good for you. Hey, good for you. But it did trigger for me, and because I called it and I was in. So, I actually took a stop out on this Groupon. But on Friday, I got back in it. Again, we will see, but this stock is down quite a lot. Went from $3 down to like $2 in earnings. And after $2, it dropped to like 50, 60 cents, right? That's a big drop, and it got a little bit vertical. It got a doji candle at the bottom, small inside green candle on Friday. So it looks to be finding a bottom, right? So in my opinion, if it gets back above Thursday's high, right, I think this goes back up above $1, right? But that Thursday's high is going to be key to watch. So we need to hold that. But Groupon, I'm in this trade as well, looking for a bounce. We'll see what happens. Last open trade for us, but not the least, is EQT. What a beautiful start to the trade, right? So I got into this trade on Friday. I called it like a week in advance that if EQT comes back above 772, we'll buy it. So on Friday, this trade triggered. I bought it at 772, put my stop loss right over here, right? And boom, on Friday, this thing just put in like a massive green bar. Went from $6 to like 950 and closed literally at the dead high. So that's obviously an awesome sign. I'm in this trade, looks great. I'm going to be raising the stop loss on this trade now. I'm probably going to go break even on this trade, right? Because I don't want to lose after that green bar. So I'm going to put my stop to break even. So now this is a no lose trade. We can't lose on it. And I'm looking for it to get another, $1 or $2 higher, go into the 200 MA, and then somewhere in that vicinity, if we get a nice push up on Monday, we'll take profits. So here's the thinking. If we gap up on EQT on Monday, above $10, just get out at the open. I'm going to send you an email anyway, letting you know what to do. But if EQT is gapping above $10 on Monday, just get out. Take your profit, call it a day, right? If it's opening flat, then we hold it, right? We hold it and we try to get 11 from it. So that's the thinking behind EQT. So stop loss is going to be raised on that one. And as far as Groupon is concerned, obviously we're not going to raise the stop loss, but the trade is looking good. We got into this trade at a pretty good price. Looks good right now. If it gets back above Thursday's high, so Groupon gets back above, let's say 85 cents, right? Then I'm probably going to raise my stop loss, right? And tighten it up. But I need to see it get above Thursday's high first. As far as Oxy is concerned, I will say I need it to get above 1550. If Oxy gets back above 1550, I'll probably be raising my stop on that one also. But in the meantime, I'm not doing a whole lot here as far as the trades are concerned. And I'm not going to be calling any new trades at the moment because it's very uncertain environment, right? We're already in 3 longs. That's already not a great position to be in because the market gap down on Monday. I mean, all these trades could go to crap. So we'll find out. But as far as stuff I'm looking at, they're all on the long side. That's the problem. I like this GEL, but this is also an energy stock. So we're already doing Oxy. So we're not going to do both. But a lot of the energy stocks are looking good to me, like GEL. I don't know if this is an energy stock, but it looks like it. OVV, if it gets back above $4, it could bounce higher. And then the CPE, this is also an energy stock, petroleum stock. If it gets back above like 93 cents, this one could move higher. Again, another energy, CMRX Energy, XEC. If it gets back above 1822, it looks like it wants to bounce higher. And then there's KOS, another energy stock. If it gets back above $1.37, this could move higher. So again, a lot of the energy ones are looking good, but I'm doing Oxy, right? So I don't want to do a bunch of energy stocks because we're depending on oil prices, which is not a good thing. Still watching this APRN, but it needs to get back above $3.10 for us to even look at it. So again, there's a lot of stuff that I'm watching, but as I said, we could be entering a pretty interesting period, and I could never be more glad that I'm a trader and I trade for a living. Seriously, guys, like think about it for a second, right? We got to count our blessings. Can you imagine if I had an actual job right now, if I was working hourly, right? And then businesses are closed and I don't get any hours. How do you pay my bills? Wait for the government to give me a handout, right? Imagine if I had a other physical job, right? Imagine if I had a physical business. Like all those things are so tough, right? Because you have to basically face the risk of getting the virus, to go into work. Think about that, right? Or taking So that's why sometimes this is a day to be grateful. I'm not talking down on anybody. I'm just saying this is a day to be grateful because I don't have to, I'm a trader. I wake up, I have my coffee, I walk down, get out of my bed, walk down the hallway, sit in my office, day trade the markets, done day trading, I swing trade Forex. I'm done with that. Then I record the newsletter. And I'm working from home, right? And it's a great feeling, right? Even if I want to talk to people who invest with me, they call me, right? Or we do Skype calls. I don't have to step out. So this is actually great. So I'm just taking a moment to be grateful for this life, this business, and I'm just just grateful is what I can say. I don't have to go to take the subway or anything like that. It's just yeah, it's something to be grateful for, and I think this is one of the benefits of trading. Right? Forget the money for now. Forget the freedom. Forget the lifestyle. Just things like this, right? Things like this. And then the market volatility, where most people who are not traders, who are investors, they're freaking out. And guess what? We're trading it. And it's been a phenomenal, for me, it's been great. And I'll show you a little bit of what I'm doing. Again, these are not swing trades, but these are trades that I do as a day trader when I do options, and I've been having a phenomenal freaking week. This is how I did on Friday. Well, I don't know if you guys can even see it, but how do I zoom in? Let me see if I can zoom in. Yeah, this is how I did on Friday, right? This was my P&L on Friday. I was selling a bunch of put options on the spiders, 249s, 257s. These are option trades, all naked trades, meaning naked puts. So I was selling puts on Uber, spiders, and I had a phenomenal day on Friday where most people were talking about getting killed, right? I had a great day. And even not just that, throughout the week, actually had a pretty good days, just doing the spider option, taking advantage of the volatility in the markets, taking advantage of people's fear, because when people get fearful, they start buying put options and they start paying ridiculous amount of money for it. And I act as the insurance agent and I say, okay, you're fearful of the market. Guess what? I'll buy it from you, right? So I sell them the put option. So I kind of act like an insurance agency. That's a different strategy, not the talk of newsletter. But doing that, I've been doing pretty good. I've been taking advantage of the volatility, and I'm looking forward to more of it, right? Because I'm probably going to do the same thing next week. So if markets are coming down over here, I'm probably going to sell puts down below, right? People are fearful. I'm like, all right, I'll take the other side of your fear, and we do that, right? So that's, for me, it's been pretty good that way. But as far as new trades are concerned, obviously we're already in 3 trades. I do not want to get into more trades. And at the same time, even though I do think the market's going to go lower, I don't want to short something right now because we're down quite a lot too. Any rapid bounce. And as you've seen, those who've been watching the market, you've seen when the market bounces, it bounces hard. When it falls hard. And again, is that a surprise? Not really. Go back and watch the last video I sent you or the video before that. And I've talked about it. In bear markets, you get the most fiercest rallies, right? So markets will bounce big time on bear markets and make you think, oh my God, this is the bottom. And then you get hosed, right? Can you imagine what people felt over here? Gap down, big bounce, right? From 296 to 308, huge bounce. And then another bounce here. People like bottom, right? We're back above the 200 MA, right? This is the bottom, right? All that happens is if we touch the 90 MA, we fall back lower. Oh, this is definitely the bottom. All the way from 272, we closed at the dead high, 282. They were like, this is the bottom. And then, no. And then Friday, people said the same thing, right? This is the bottom. We set a new record for the markets. We'll find out on Monday. But the way it's looking, we're probably going to go back down lower. But again, if you do go higher, 90 MA. That's the guide, right? When on bear markets, when you go momentum, stuff hugs the 90 MA. So if you go back up 90 MA, we could probably get a rejection from there. But most likely next week, we're going to break the lows. And if we do December 2018 low, that's the low, in my opinion, that you want to be able to be a buyer on, right? Right around here, you want to be able to be a buyer. If that decline happens, actually, it's not a matter of if, it's a question of when, right? But again, for technical trading, we want to watch our levels. Watch this 257 to 63 level. Talking about the NASDAQ QQQ, similar situation. QQQ came down, we bounced up hard, but notice how the NASDAQ, the Qs are still below their moving averages, right? And the December 2018 low on NASDAQ is actually much, much further, right? Much further than the spiders. So that's a huge move down. In the intermediate term, again, you obviously want to watch on the Qs. You want to watch Friday's level, right? If you want to be able to hold that Friday's level, if you can hold that Friday's level, great. But I doubt it. Then the next level will be a little bit down below, right over here, right there. That's another level to watch on the NASDAQ, about 171. dollar area. So a lot going on, a lot going on. I think we've done good this year overall. We did give back some of our gains in March. We had a phenomenal February, right? Record February. I think in January, risking 2% per trade, I made like 8% in Jan. Feb, killed it, made like 22% on a 2% risk. March, gave it back a little bit, right? March, I gave back a little bit. Half of my Feb's return I gave back this March, trying things. But the good part is, market's down 25% for this year, right? On a 2% risk unit, follow the newsletter, you'd be up over 20%. Even risking 1% per trade, you'd be up about 10% or so for the newsletter, which is 3 times the return of the market, right? And if it's going to take this much of a decline for us to lose a little bit of money, then that's worth it, right? So again, long term, that's what matters. Just sit back, relax. Don't try and be a hero. Heroes get killed in this market. Don't try and pick a bottom. Don't bottom fish. Don't try and be aggressive. All right. Have your levels. Have a plan. Have a plan and trade that plan. This is what's required in these environments. Countless stories of people calling the bottom, getting killed because it just went a little bit further than what they thought. In declines, when you want to time a bottom, you got to have staying power, right? Bunch of bullets in your gun. Don't shoot all your bullets at once. Have bullets. That's why I'm having levels to try and get into this decline. What did I say? I'm going to buy maybe 10, like right over here. What did I say? Let's buy 25%, right? Let's add down over here. Then let's get full right over here. That's my plan, right? Talked about it. Buy a little bit, get into 40% over here. Get the rest down there, right? So that's the whole plan. So again, I'm in personally about 40% already. Leaving a little bit, leaving 20% for here, 20, 25, 30%, and then rest for down here. That's my plan. Because when I do that, guess what happens? My average cost becomes somewhere over here, right? In the middle, somewhere in the middle, it becomes my average cost. And then I think even if the market does go further than that, which is absolutely possible, thinking about a 5, 10 plus year horizon, you're going to be okay. All right. So that would be my suggestion. Don't try and rush into buying things. I look at people and they're like, oh, let me buy Apple, let me buy Microsoft, let me buy all these things, right? Getting at a discount. Not so quick. Not so quick. The chart of Microsoft is worse than the market. This is crazy. Right? I mean, if I was to make a prediction on the chart, I would just say this. You don't hold 150-ish again, we're going to test 130. If you don't hold 130, you're coming down like $100, right? That's how these charts look. Remember from PTS course, phase 1, sideways. Phase 2, run up. Phase 3, get way extended, and then you get a phase 4 decline. Every single chart does that. Show me any chart, and I'll show you when it's done it. Let's go back. Look at Microsoft here. 1995 to 2000. Big run up like that. Look at what happened. Pulled all the way back down. Look at this. Twice as big. So twice as big as a fall. Right? Even Bitcoin does that. Right? Even Bitcoin does technical analysis. Look at Bitcoin. You might look at it. Let me go to the weekly chart. So you might look at this decline over here. Remember? Went from 2,000 to 20,000. What happened? All the way down. Look at this one here. 3 to 12. All the way down. And is this the first one? No. It's done it before too. Just people didn't care about Bitcoin before. Look at this one here. Went from $120 to $1,000. All the way down. So that's how charts move, right? Phase 1, sideways. Phase 2, the run up, right? Phase 2, you get the run up. And then you get extension. You get a phase 3, choppiness, right? People starting to liquidate. And then you get a phase 4, decline. Right? Every single stock, every single chart is the exact same. Show me anything else. I don't know. Pick a stock. Well, you can because I'm recording a video, so you can't answer. But I don't know. I'll just type in NASDAQ. Let's take a look at NASDAQ, okay? The stock market as a whole. Let's go to our weekly time frame. Are we already on weekly? Look at this. Look at this. Look at this. Go back in history. Year 2000, run up, extension, down. Look at this here, sideways, run up, extension, down. Now we're in a massive run up. Can we come down? Of course we can, right? Of course we can. Every single thing moves the same way. I don't know, let's pick RAD, right? The stock we've been trading for a while, right? Look at this. Phase 1, side. Oh my God, this is great. I'm glad I picked this chart. Phase 1, sideways. Phase 2, run up. Phase 3, the extension. Phase 4, decline. Inside that decline, let's zoom in. Sideways, run up, decline. Look how many times this has done it, right? Look how many times this does the same thing. Run up, sideways, run up, decline. It's still doing it today. Look at this. Sideways, run up, choppiness, decline. Phase 1, phase 2, phase 3, phase 4. You don't think it's doing it right now? Let's zoom into a daily chart of RAD. Sideways, run up, extension, down. Every single stock is the same. Once you learn technical analysis, once you learn how to read charts, nothing is going to surprise you. Basic concepts, right? I'm not talking any advanced concepts. I'm not talking to you about look at this indicator crossing that line or this line. Nothing complicated. Stocks, all charts, stocks, currencies, Bitcoin, commodities, everything moves in cycles. Phase 1, phase 2, phase 3, phase 4. Let's take a look at gold. Does the gold do phase 1, phase 2, phase 3, phase 4? You bet it does, right? You bet it does. Look at that. Every single thing moves the same way. Let's go to a higher time frame of gold. So we can just zoom out a little bit. Phase 1 sideways, phase 2 run up, boom, decline, right? It's done it even before. This is a monthly. Want to see a weekly chart? Let's take a look. Look at that. Phase 1, phase 2, decline, run up, decline. Everything does the same thing. So that's why when people talk to me about, Anmol, I want to be a buy and hold investor. I'm like, I can tell you this, you're not going to be buying and holding. You're going to be buying and hoping, right? Buy and hope investor. Don't be a buy and hope investor. That's why trading is the best, right? And I can tell you hands down, most, even think about hedge funds. They go on CNBC and then they talk about fundamentals of the company, the CEO, bullshit, right? Because inside their hedge fund, what do they got? They got board of advisors. They got technical analysts performing and giving the analysis to them, right? Why do you think they call a lot of these hedge fund guys? I mean, not big ones, the smaller ones. They call me, hey, Anmol, we're thinking of, these are our portfolios and our positions. We want to consult with you. And then I charge them, right? Obviously, I will charge them, right? And I charge them good money too, not $97 that you guys are paying, right? Tens of thousands of dollars for consulting. And then they say, this is our portfolio. Let us know if we should get into this stock. And I'm like, well, right now, no, this is below moving average, blah, blah, blah. When it gets back above there, then you can buy. So what they do is they have their fundamental view on a stock, right? So this is how hedge funds work. So they'll have a fundamental analysis. They think the earnings are going to grow. The CEO is nice, blah, 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 blah. But then they're going to wait for whoever they've hired as a technical analyst to say, okay, now you can get in. And that's when they get in. Why do you think when trend lines break, that's when the big moves start? Because the technical analyst at their firm is saying, don't buy yet, don't buy yet, don't buy yet. Okay, now you can buy. You're above the downtrend line. Boom. Then the stock takes off, right? And then the technical analyst, whoever they've hired in their firm, right? Again, every hedge fund has an internal technical analysis list that works, right? So they'll say, okay, we're extended now. You should probably take some profit. And guess what happens? Whenever we extend it, we come down because that's what the technical analysis is telling them. They sell, and then that causes the whole situation. So, you guys got to understand, fundamentals sound fun because that's what they need to talk about on CNBC. Can you imagine if I was on CNBC, right, and I come in and I don't talk about fundamentals, and when people are like, Anmol Singh, the CEO of Live Traders, what do you think about where the markets are headed? And I'm like, well, we're away from the 9 EMA. it's a little bit extended. The volume's kind of decreasing a little bit. I think we're going to pull back. Market internals are suggesting this. They're going to be like, what the hell, right? Their ratings are going to go down because average, person sitting at home going to be like, what the hell is he talking about, right? So they're never going to get me on CNBC. But if I was to go out there and say the Federal Reserve was cutting the interest rate, the economy is doing this, now they're like, oh wow. So you guys gotta understand the whole game, how these things work. But honestly, I don't care because my goal is to make money. So on that note, hope that helps. Again, no new trades for this newsletter. We are in 3 trades: the Groupon, the EQT, and Oxy. We're gonna continue to manage that and get ready for the craziness that's gonna be this coming week. Oh my God, this one's gonna be a heck of a week in my opinion coming up. I've got my brokerage accounts funded. In case something happens, I will be there to take advantage of that. So have a great one, everybody, and I will talk to you guys in the next edition of the newsletter.